A business sale is probably the largest taxable event that most people will ever face. They might be selling their business that they built from the ground up for a few $1,000,000, and getting the tax right can save you $1,000,000 easily in that transaction. So they come in two flavors. A asset sale, where you sell all the underlying assets of a business, which is what a purchaser is probably going to want, because it means that they're not inheriting any liabilities with the assets. And the other kind is where you do a share sale or a unit sale, where you will transfer the entity that operates the business. Most businesses are operated by companies, therefore it's often a share sale. Now, one of the first tax planning points is that a company selling assets does not get a 50% CGT discount, whereas an individual or trust that owns the shares in the company, if they sold those shares, they would get a CGT discount. So this makes a bit of complexity when you're navigating these kinds of sales, especially a purchaser who only wants the assets and a vendor who wants to sell the shares. To make this even more complicated, you overlay the small business CGT concessions. You do that the right way, you can actually make a purchaser happy in buying the asset. You can make a vendor happy with applying the small business concessions, which can reduce that gain immensely, and everyone walks away happy. Otherwise, you need to figure out some more creative solutions, and there are more creative solutions out there to make sure that both sides are happy, because the important thing is that the deal gets done, not that the tax is as low as possible. The deal needs to get done, because if you don't get any money for it, there's no point saving all this tax, which is what I tell people all the time. Now, we do a whole range of business sale work, both doing the corporate commercial stuff, the actual agreements, and I do a lot of the advisory on the transaction structure itself. So please come talk to us if that's what you're looking for.